What's going on, guys? I want to show you my day trading strategy for SPY. It's very profitable. I use this pretty much every day with SPY. It's my most consistent for sure, and it doesn't use any credit spreads, is the good part. I know a lot of you traders just paper trade and you don't want to play around with credit or anything, and this is great. I'm only using a few indicators. I'm using EMA 5, 10, 20, and the Keltner channel. And I'm just gonna show you. We're gonna go live technical analysis, and basically I'm gonna show you as the day was going on, my thoughts, what I would have did, and how I did play this day, for example. So first of all, we're on a 15-minute time, right? The first candle at 9:45 is this candle right here. So we're gonna draw a horizontal line at the top of the body and the bottom of the body. We're not gonna play around with the wicks, right? So we have these horizontal lines. Now, these horizontal lines are going to make sure that we can find the trend channel break. So whatever way the candle breaks out of first, whether it's like a bullish candle or it's a bearish candle, that's how we're going to know what kind of play we're going to get into. So for example, this 10 o'clock candle didn't break through, neither did this 10:15, but this 10:30 candle did, right? And it broke out in a bullish manner. So, with that being said, we would be getting into calls for the day, but the question is where. So, what I do is I look for the first candle to break out of the trend and a retest of the EMA 5. And all that means is I want that candle's body to close on the EMA 5, right? Or over top of or overlapping, right? As a retest. Now, as this is scripting, it's gonna be kind of clear if it's gonna hit the EMA 5, especially a tall candle like this with having like a significant amount of volume, right? It's a big candle. So we would know that this is going to retest the EMA 5. I knew it was going to, so I ended up getting into my calls right here. And these are 0 DTE calls, by the way, 0 days till expiration, so they're very vulnerable. A little price movement can go a long way. With this being said, Chris, what is my exit point? How do I know when to take profit? Take profit whenever you can get them, right? Realistically, I would play. I'd see how the next candle went and then decide from there. So this next candle, it was it closed higher than the top of the candle I bought in at, and I was already at a 20. I think this was like an 18% win at this point. But I was like, okay, so I scalped. I sold a third of my positions, and I stayed in. We had this negative candle. It retested the EMA 5. That's the new support level. So let's see, is support can get broken or is resistance going to hold, right? Support ends up holding, and I ended up making good profits up into here, which ended up only being a 0.5% price jump, but ended up being 42% I made on my calls. That's just one day. Let's go back a whole nother day. We'll do yesterday. We can really pick like a random point, but let's just do yesterday, for example, because this is a consistent strategy. This isn't. I'm gonna get rid of my old lines. We're gonna get a horizontal line. This is our 9:45 candle. Horizontal line on both. We break out in a bullish, so we're gonna buy calls. But what do we need first? We need that EMA 5 touch, right? The retest of the EMA 5, right? Which we end up getting. Right here. Right on this candle, we get the EMA 5 retouch. And then literally look what happens. You get your calls here, and you could sell anywhere up here, or you could even sell when the support dies from the EMA 5. We're using the EMA 5 as our entry, and we're using the EMA 5, 10, or 20, depending on how risky you want to be, for the exit. It's as simple as that. I'm the type of person, if I enter a play right here, and I have a huge candle jump up like that, 0.5%, that's the same amount of profit as I got on that trade today. And that would have been in the matter of 45 minutes, not even. So, as you can see, that one's set up quick. Let me go back. Let's go do IWM, because I'll trade IWM like that occasionally, right? IWM 945. So we need horizontal lines here. Remember, we're not using the wick. We're only using the body. That's our 945 candle. We broke out bearish, but look what also happened on that first bearish candle, right? We retested the EMA 5. I would have instantly got into my play right here, and look how much money I would have made. I would have sold as soon as we retested the EMA 5. So I would have maybe taken profits through here, but I would have sold on that candle, and that's a 2% price jump. That would have been similar profits. The good thing about this is like you can set a stop loss for like 10% the other way, but you have like 10 to 1 chances to win. That's the great part about zero DTE contracts where like we'll look at tomorrow where the theta is 0.02. It's 2 cents. It's 2 cents, right? But the implied volatility is 30%. So it's not like you're getting fried on how expensive these calls are or puts are. But these are the 5 stocks that I trade this strategy with. It's SPY, Tesla, IWM, Gold, and QQQ. They're super reliant, and I like SPY the most. SPY always has so much volume. 3 simple steps. Horizontal lines at the 945 candle. It's a 15-minute chart, right? Whatever way you break out, you're waiting for an EMA 5 retest. You get in with a 0 DTE contract, right? I usually like about $1, so $100 per contract. And you're taking profits when you can. And if the trade goes 12% wrong, which like it really never does, but if it does, then sell. And then find a new trade. Wait a day. Like not every trade's gonna be perfect with all the manipulation, but this is a reliant way to make money.